institutions are throwing money at private equity right now. Hurdle rates are coming down, etc. We'll talk about those in just a minute. But I guess the bigger question is, how can you generate decent returns out of a sector if you've got this much money chasing a limited number of deals?
Well, we have about $1.7 trillion of dry powder in the market, so that means the amount that has been collected but not yet deployed. Yep. There is a lot of competition out there in the market, so you have a lot of private equity firms chasing corporate carve-outs, take-private situations, and they're not only competing with people in their asset class, they're also competing with sovereign wealth funds, Canadian pension funds, cash-rich strategics. And yes, returns are coming down. You see private equity firms like CVC, who then start funds which are their strat-ops funds, which allows them lower returns in their funds, but a longer lifespan.
Yeah.
Where do you expect private equity to go? Are they looking for deals now in other places because everybody is after the same old stuff?
So I think traditionally private equity will still look at secondary buyouts, so they'll still be looking at portfolio companies from their peers, but you do see them increasingly looking at other take private. They're looking at listed situations, they're looking at corporate carve-outs, but corporate carve-outs can be very complicated and they can take a very long time. Last year, we saw a couple of take-privates, one in particular which was very difficult. It was a German generics business called Stada. We had the emergence of a activist investor, Elliott Management, and it didn't quite scupper the deal, but it made the deal, it lasted a lot longer than it should have done. Corporate carve-outs can also be very complicated, but they're also getting done. We saw last year KKR buy Unilever spreads business, and what we've got going on at the moment is AkzoNobel selling its specialty chemicals business and its private equity that are chasing that unit.
Just coming back to the fundraising, what's an average? What was an average hurdle rate, and where are hurdle rates going now?
So the average hurdle rate was pegged at about 8%.
Yeah.
But you see funds, so you see very successful funds like Warburg Pincus,
yep.
Warburg Pincus, Hellman & Friedman, who have raised funds without any hurdle rate.
Without a hurdle rate at all.
And then you see in 2016, Advent, an international Boston-based and London-based fund, they raised their fund also with no hurdle rate, but they were oversubscribed. They raised that fund within 6 months. So it goes to show that institutional investors are desperate. They have so much money burning holes in their pockets, and they're keen to throw it at private equity.